Welcome back to BLOCKTV, and it's time now for Stress Test. In the crypto sphere, the two biggest drivers seem to still be fear and greed, and with emotions running the show, there's a serious need for the industry to develop more accurate metrics. Unfortunately, we have with us a person who can help us to understand things from a new perspective, the TIE co-founder Joshua Frank. Josh, thanks so much for joining us.
Thanks for having me.
Now, Josh, this comes on an auspicious week for Bitcoin, seeing massive declines last week. We haven't had a chance to really speak since then, so I want to understand what's driving this from a sentiment perspective, this big decline. How is the market reacting? And most importantly, I think on everyone's lips, does BACT take all the blame for this?
Yeah, so what we've actually seen is that sentiment had started to decline a couple days prior to the back launch. So sentiment declined starting on September 21st when it hit its lowest level in September. Generally been pretty positive, which was a couple days prior to the back launch. I don't want to say that sentiment led or explained the entirety of this price movement, but sentiment within the market had definitely been on the decline. And what we'd also seen is that tweet volumes as well had been declining pretty significantly since about July, which is usually a sign that retail interest is waning quite a bit. So from talking to others in the industry, it seemed like there is some sort of large movement from potentially a Chinese miners trying to liquidate tokens OTC, which then just basically caused this domino effect of liquidations on BitMEX after prices already fallen and just kind of this wild crash. And I don't think it necessarily, relates 100% to BACT's launch, though I think BACT's launch probably is added to the pain. Because if we look at the actual date of launch, September 23rd, 62% of tweets around BACT and Bitcoin were positive. And BACT was the fourth most used word in Bitcoin tweets. And going, one day after that, after the product had launched and there wasn't a lot of trading volume on BACT, BACT was the most used word in Bitcoin tweets. 52% were still positive, and mentions of @BACT, which was the fifth most used word, 59% of those were positive. It wasn't actually until 2 days later when these stories had kind of come out saying that this failed BACT launch had kind of adversely affected the market that we really started to see this negative sentiment on BACT pick up. So 2 days after launch, 54% of tweets about BACT had become negative, and then 3 days after it had dropped to 71%. So it was kind of a delayed kind of negative reaction to BACT that it doesn't really seem to correlate with actual price movement within the market. But I think it's definitely not helped. I think if BACT futures had launched and a billion were traded every day, that would obviously be a lot more positive for the market. And it's obviously disappointing that the trading volumes are so low. But I don't think that BACT in and of itself, which is the narrative that a lot of people have pushed, was the reason and the precipice for the market crashing by $2,000-3,000.
But I suppose I've got to wonder, when it comes to sentiment data and BACT, BACT specifically targeted itself at those institutional players who obviously don't necessarily fall within the metrics of the standard sentiment data calculations. Do you think that
Sure.
could have any element to do with it? Do you see that narrative playing out in any way, shape, or form?
Yeah, well, I mean, look, the thing is, crypto is still a really retail-driven market. And if retail reacts negatively to an event, retail traders have the ability to bring the market down. A lot of institutions have fully allocated their crypto, right? They're not sitting on cash, so they don't have a lot of buying power to bring this market back up. So I think, I think institutions probably, a lot of them already knew that, if you're at, one of the bigger institutions in the space, and there are only 5 or 6, you probably already knew that you weren't planning on trading on BACT and that your counterparties weren't as well. So I think, part of it is, this people picking up on the retail reaction to the launch.
Certainly it seems to have that impact of the retailer market playing it out, the buy the rumor, sell the news sort of setup that so many seem to be suggesting may be the case. But moving beyond that issue, there are other elements of the market still to address. I know you've got some interesting statistics coming out from Litecoin. What can you tell us?
Yeah, so Litecoin sentiment had actually moved a little bit positive from a daily perspective coinciding with the small run up of the coin earlier this month, but we've since seen that decline. But the really interesting metric, and the only really thing to point out, is that Litecoin tweet volumes have crashed to an all-time low. So we've seen Litecoin's tweet volume drop by 86% since its all-time high. And this isn't just related to Litecoin, this is altcoins more generally. So if we just look at every single, all the largest altcoins here, we can see that across the board, altcoins have seen declining tweet volumes. This is from January 2018 to now, so year to date. And we've seen, sorry, not year to date, the last 2 years rather. And we've seen significant declines, especially for XRP and for Litecoin, where tweet volumes on these assets are down 80 to 90%, which signifies that retail interest within those assets and within crypto more broadly tends to be waning. I mean, we were seeing about 80,000 Bitcoin tweets a day at the end of 2017. That number has since dropped to 28,000. So it's a very, very significant drop. And we also see that reflected in long-term sentiment. So what our long-term sentiment metric measures is how positive or negative conversations have been over the last 50 days versus the previous 200. And we've seen since about August, long-term sentiment on a lot of the largest coins begin to decline, particularly Litecoin, which saw that massive drop from about 50, which is neutral, to around 25. So it's halved. But we've seen that drop across the board. Every single cryptocurrency has seen a decline in its long-term sentiment score since about August. So, although we didn't see this, larger market drop until recently, it seems that sentiment and tweet volumes and interest in crypto have dropped pretty much across the board since Bitcoin's run up earlier this year.
But I suppose I got to wonder, there are so many, particularly obviously those who are well invested or well interested in one alt or another, that they say that the alt season is still to come. It'll be around the corner. Only any day now we're going to get that alt season that so many are hoping for. Do you see any sign in the data that might be happening, or do you think this is a steady decline from here?
Unfortunately, this is not the most positive segment we've ever done. The data doesn't look good for anything right now. Talking to institutions, it seems like a lot of them are fully allocated. Retail numbers are going down. I think we're in for a bit more pain. And I think, what we need is, we need some pension plans to come into the market and allocate, 3 bips of their portfolio or 6 bips of their portfolio. Or we need to see a spike in more retail use cases that are driving people. So I think, like the Cash App and Lolly are doing a great job at trying to drum up some more retail interest. But I think, in 2017, the reason you saw a lot of retail interest, particularly in altcoins, had nothing to do with the underlying technology behind these altcoins. It was basically just the idea that, hey, this Ethereum ICO popped off and went crazy, and I can make 2,000x, and I missed out on Bitcoin, making me 50,000 times my money. But maybe I can make it with one of these altcoins. And I think that was kind of the driver of a lot of this retail interest. It really yet hasn't been underlying technology. Like a lot of people love to talk about DeFi, but DeFi for the most part is, 500, 1,000, 2,000 people that are already in crypto, that are kind of like core crypto sloshing around, with the same pool of capital. And I think that's one of the issues we have today is that, a bunch of projects are getting funded, but they're getting funded by the same people. It's the same people operating in the market. This market needs to expand. We need new entrants, new participants. And I think the existing players in the market are just shrinking, not growing. And we're not seeing, at this point yet, outside interest and more people moving into the market.
It seems that there's a bit of stale money floating around, as you say. But fortunately, we might have stale money, but it seems we don't have stale data, because I understand, Josh, as well, that you have some new data sets for it. I thank myself for that nice little segue. But
that was good. I like it.
Thank you. I understand you have some new data sets for us to show and highlight. What have you got for us?
Yeah. So over the last couple of years, we actually have been building out another data set beyond sentiment, called corporate actions. And the idea is that in the equity market, you have this idea of a corporate action. So a corporate action could be like a dividend or a stock split or a stock buyback. And it's something that's really fundamentally affecting the value of that asset and driving the value of that asset. So within the equity market, investment managers, asset managers will get a feed of corporate actions. So every time a significant event occurs for any particular asset. So we've decided to go out and build that same feed for crypto. So in crypto, there aren't the same exact ideas, but they're very analogous terms. So for example, a dividend is kind of similar to a hard fork where you have one crypto and you're creating two. It's kind of like receiving a dividend. A token burn is kind of like a stock buyback. So what we've done is we've created a feed which pulls from over 2,000 unique English and Chinese sources. So we're intaking that data into our system. We're doing a level of natural language processing. So trying to identify what those headlines are actually on. So we're pulling from Chinese publications, mainstream media publications, Twitter, Reddit, Medium, basically anything you can think of. And then the first step is identifying what asset that's actually on. And as we've discussed with sentiment, that's a really difficult process. So for example, Canon makes a camera called EOS. So how do you make sure you're looking for funding of EOS and not Canon, right? So how do you do that? How do you differentiate between what a headline's actually on? And then the next level is basically just in real time trying to identify, is this a hard fork? Is this an airdrop? Is this a 51% attack? And in doing so, we've been able to pull a lot of interesting data. So one of the more interesting things that we did was we looked at headlines from just cryptocurrency publications over the last few months. We had kind of presumed and known that mainstream interest in the crypto had just gone down, so headlines from mainstream would be down. What was really interesting to see was that headlines from crypto publications were down 32% over the course of just 3 months. So whereas we had seen 5,800 headlines coming from 24%, not 32, but we had seen 5,800 headlines coming from crypto publications in July. That number has since declined to 4,450. But another interesting insight that we gleaned here was that we have brought up in the past that people on Twitter haven't really been talking about Libra, but Libra is still the 11th most used word in Bitcoin headline or in crypto headlines more broadly, which is interesting because it doesn't seem like people on Twitter and the Twitterverse tend to be talking about it quite as much. And we also had seen, as we mentioned back before, BAC didn't really make a splash at all among crypto headlines. It was only the 27th most used word in headlines this month, whereas Libra was mentioned even significantly more than BAC was. And another interesting insight that we gleaned, and this is from headlines more broadly, so not just from crypto publications, but the word institutions, and institutional in Bitcoin headlines has hit a 2019 low. And it's hit lows not seen since about August, September 2018, which is, mentioning in headlines doesn't necessarily equate to whether or not institutions are actually allocating to crypto, but it's tended to, correlate pretty well with the more recent decline in the asset.
Certainly some interesting metrics to put in perspective for those looking to understand a little bit more of the comprehensive nature of this sphere, how it's developing from a media perspective as well as from a sentiment perspective. Always great to have that valuable data out there in the sphere. All right, I want to thank you so much, Joshua Frank from The Tie, for helping to bring us this new and informative data. As you say, not the brightest week in cryptos, but there's a long future ahead.
It's going to get better.
Exactly. There'll be lights at the end of the tunnel. All right, Josh, thanks so much for being with us, and stay with us at BLOCKTV.com for all the latest in news and information. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter